Today's episode is brought to you by GuardRisk Launchpad, the disruptive insurtech initiative created by the country leader in cell captive insurance. Now, despite the rise of some incredible South African insurtechs in recent years, the industry still faces some of the highest barriers to entry of any vertical. To support innovators, GuardRisk, part of the Momentum Group, created Launchpad to partner with qualifying insurtech ventures and provide capital, acumen, distribution, and a suite of value-added support. To learn more, visit grlaunchpad.com. Welcome to the Startup Club podcast, where we share the journeys of invention, failure, resilience, and triumph of some of South Africa's foremost tech startup founders and investors. I'm Mathew, founder of Startup Club ZA, and on the show today, the journey of Clive Butkow, who rose from modest beginnings to build a 3-decade-long career with global consulting giant Accenture, before retiring early to spearhead one of the country's most recognized venture capital firms, Kalon, in 2014.
But I actually had no clue whatsoever. But I knew what success looked like, and I'd seen what success looked like, and I knew I wanted to be successful. And I just knew, maybe at a very young age, I just had to outwork everyone else. I had to work harder than them to actually make it in this in this type of world.
According to Partech's most recent tech venture capital report, Africa was one of the very few, if not the only VC markets to grow in 2022, climbing 8% to $6.5 billion over 764 deals. Now, according to Dealbase Africa, South Africa contributed 112 of those deals, totaling $680 million, with participation from over 244 different investors. The country is consistently ranked among the top 4 venture-backed ecosystems in Africa. But when Clive Butkow entered the venture capital space in 2014 after a flourishing 28-year consulting career at Accenture, venture capital inflows for the entire continent were less than $30 million combined. Since launching Kalon's first fund in 2014, Clive has built a reputation as a seasoned operator and advisor with an eye for identifying great investment opportunities early on, having built an impressive portfolio including the likes of Ozow, Sendmarc and Talk360. But it didn't start there. Clive Butkow was born in Johannesburg in the 1960s and grew up as one of 4 siblings in a modest income family, his father an accountant and his mother not working. With very few nice-to-haves around him, he recognized from a young age that he'd need to do things differently to create a better life for himself and those that he cares about.
Thanks, Mathew. Once again, I appreciate the opportunity. Yeah, I think, I think if I look at my crucible moment, really, I was 7 years old, started working in a men's clothes shop. And actually, my brother worked there, and they offered me a job, paid me about R2 a Saturday morning, which wasn't exactly much. And I was always been this entrepreneur, like the lemonade entrepreneur. So before I want to go back to the clothes shop, I started selling kites. I started selling Scooby-Doos, making them, selling them. I remember actually going around and collecting from the neighbors these little bottles of Coke, and they were glass and used to get about 2.5 cents per glass. And I would collect enough of these and I could buy the string and the sticks and whatever I needed to make kites. I would make them for 10 cents, whatever, sell them for 30, 40 cents. And I learned an unbelievable amount there, because what I learned is sales is not about selling, it's actually about rejection. So I quickly learned that if you got to knock on every single door, and you knock on a door and they just say, "Scat, you little brat," and close the door in your face, and you can't take it personally. Sure. Yes, initially I got a few tears and I took it personally, but then I realized that sales is about a rejection job. So I would knock on 10 doors, 9 would say, "Scat, you brat." The 10th would say, "I love your kites, let me buy 5. And I made quite a bit of money actually from selling these kites. And similarly selling Scooby-Doos and all the other things that a typical kid make. Coming from that very humble background where I had no money myself, so I had to realize I had to earn. And I think my biggest blessing was, for one, I had wealthy friends, and secondly, I had a poor family. So I think that actually creates the hunger in me to actually learn. And I think that's when I started working when I was 7 in this clothes shop. And in all honesty, I think I could sell a hanky. I couldn't sell more than that. Sure. And a couple of years after working in the clothes shop, I actually followed someone and I watched them, and someone was coming in for a pair of shoes, and they would sell 3 suit shoes, 3 shirts, and et cetera, et cetera. Yeah. And actually, I went up to this guy and I said, please, don't you want to just show me what you do? Because I can't do it, you're doing it, and will you show me?
If I can just interrupt you there, and I certainly don't want to derail your momentum. This is pretty atypical for an 8-9-year-old boy, right? So you've mentioned that there's necessity there, but I mean, were you What type of person, what type of kid were you at this point? Were you very social? Were you quite introverted? Were you quite calculated? And what did you actually want to be when you grew up? Did you have something? Was it a fireman, an astronaut, a business person? What just maybe take us back to Clive, the kid, before we get into this, how it's clearly influenced your career trajectory.
Yeah, I think Clive the kid, I don't know exactly what age I was, but because I had these wealthy friends and they had everything they wanted, they had the early cars and they had whatever it was, even at that young age. I remember I said to myself at some very young ages, I was going to be successful. But I didn't have a clue how. I didn't know what I was going to do, but I said I was going to be successful. Because I look back at my own life and I said, I had great parents, nothing about that. But I was a good sportsman, but I never had the opportunity of going for coaching. I was good at so many things, but I never had the opportunity to go. So I was good, but I was never great. And I think I could have been great if I had the opportunity that some of my friends actually had. So somehow I knew I was going to do it. I was going to make it. I was going to make money. But I actually had no clue whatsoever. But I knew what success looked like, and I'd seen what success looked like, and I knew I wanted to be successful. And I just knew, maybe at a very young age, I just had to outwork everyone else. I had to work harder than them to actually make it in this in this type of world.
Were you quite studious? What kind of student were you maybe in
Terrible.
school?
I was as naughty as you can possibly find. But fortunately, I was really good at maths and science and accountancy, and I got many distinctions in matric. But I never did any work. So I was blessed with a little bit of brain, which was the only thing I think I was blessed with. I was a very naughty kid. I won't even go into it here because I'd embarrass myself and I'd embarrass my family, because I don't think my wife even knows what I used to get up to. She would divorce me. I'm not going to go there. But
and we won't be disclosing that on the show.
Please don't do that. But that's what it was. I was a naughty kid. Fortunately, I had some brains. Did well throughout without doing any work. I mean, I was at the pinball arcade every single afternoon. I was playing soccer and cricket with my buddies every single afternoon. Never did any work. I don't know what work actually was. What did I want to do? I had no idea. Honestly, I had no idea. I remember my teacher, I think in about grade 3, asked me, what do I want to do? I said, I want to be a plumber. And I had no idea what I wanted to do, but I'd seen a plumber come to our house and I said, I want to be a plumber. And the teacher said, but you're a little bit, maybe plumbing is not the right thing for you. And I said, no, I want to be a plumber. But what did I know? I was so young, I didn't know any better. One thing I definitely didn't know, I was going to study a computer science, maths and applied maths degree. And that was actually going to be the kickstart of my ultimate career in the business world.
Absolutely. So quick recap there. You end up doing high school at Northview, 1973 to 77. Not the best student, but good at maths and science, like you've already told us. And you do end up getting into a BSc degree in computer science and applied maths, which is quite the turnaround for someone who's not good academically, but is fantastic. End up graduating in 1982. And obviously this is a while ago, so this is why I think it's important just to paint some context around the time and what you were kind of thinking about. You finished studying, and what is your first job? What do the career prospects look like there? What are you thinking about as you graduate and now you're going off into the world? What's the thing you're thinking about doing?
I think just a bit, little rewind just a little bit. Please. I came from a family of accountants. My father, his 2 brothers, all accountants. Ironically, my wife is an accountant. So everyone was an accountant. So what I was going to do, I was going to be an accountant. And literally the day before I actually registered, I said, no, I don't want to be an accountant. I seen these computers. I played around quite a bit on computers, as immature as they were at the time. And I said, no, let me change to computer science, BSc, computer science, maths, applied maths, because I love that. And that actually was probably the best decision I ever took, in all honesty. So what did I want to do after that? I actually didn't know. But one thing I did know was I'd met this company, what was called Arthur Andersen at the time, and they came and they headhunted me to come and I had really good results in my degree, and they came and they headhunted me. And I went for probably 10 interviews. I think I was offered 10 jobs at the time. And for some other reason, ironically, I'd never been on an aeroplane before. So here I was, this kid with this degree, had sort of paid my own way through university from working in the men's clothes shop, never been on an aeroplane before. And Accenture, Arthur Andersen at the time, offered that I would go to Chicago on an aeroplane, get in a limo, blah, blah, blah. And I'll tell you something, I just was seduced by that. Yeah, I just said, no way. Right? I'm not going to Gencore, I'm not going to Standard Bank, I'm not going to all the others that offer me a job. I am going to Arthur Andersen Consulting, because I'm going to get in an aeroplane. Yeah. So I think, and ironically, it was the lowest salary of all the salaries that I was offered. And I thought, no, I heard about this organization. I wanted to go and learn, not about earning. At that stage of one's life, when you're that young, you want to go and learn as much as you can. The earning wasn't important to me. I didn't need more than, I think it was 1,000 Rand a month that they offered me, and everyone else was probably double that. But it was about earning. It was about learning. And I knew Accenture honestly, was a learning organization. They spent a lot of money on teaching and training, sending people off to Chicago. And that's actually what got me to join them. And again, in hindsight's 2020 vision, probably the best decision I ever took.
Absolutely.
But I must be honest with you, just before that, I'd actually raised capital to start my first tech business.
Okay.
And that was when Accenture offered me this job.
Interesting.
And I decided to put a pin in my entrepreneurial dreams right there. Let me go to this Accenture.
Did you give the capital back?
I gave the capital back. I actually hadn't taken the capital, so I just said, thank you very much, but I'm going to go to Accenture for 5 years. Let me just go and learn as much as I can, find the best mentors I possibly can. But I had the foresight that this place was going to teach me so much.
Sure.
And really, after 5 years, I kept on learning. You know, I'm a learner and a teacher. So I love sharing my knowledge with everyone, but at the same time, I'm an absolute learner. And I realized learning was more important than earning. And the 5 years that I thought I'd just go there, and then I'd start my entrepreneurial dreams, landed up in 28 years.
Sure.
And I worked a lot in Silicon Valley. I worked at Acclaimed as an example, Salesforce.com as an example, helped build a couple of tech companies, had a couple of exits. So that's actually where my whole career started and ended up 28 years later.
Amazing.
In hindsight, Accenture was a phenomenal organization. I wouldn't, consulting it teaches you so much about business.
Sure.
Building companies, strategy, product development, engineering. It teaches you everything that you need to know as an entrepreneur. And ironically, I should have probably left 10 years before. And the reason being is because I became a teacher 10 years before, but I wasn't learning anymore. I'd actually reached my career where I could actually learn. And I wanted to continue learning. So when I finally gave it up and when I retired, inverted commas, and failed retirement badly, is when I knew I wanted to get into venture capital. I really wanted to help entrepreneurs, share that knowledge with them, invest in them. And the money was a byproduct of success. It actually wasn't about the money.
I don't want us to just skim over 30 years of your life because those are formative years and they've certainly influenced the decisions you're making today. And just a quick recap of that almost 3-decade journey for Accenture. Again, it's quite uncommon these days for folks to spend nearly a lifetime, a working lifetime at a single business. So clearly there was something special about this business. And I love what you said about learning before earning, which is very atypical for today's generation that are graduating, even if they do, right? It's this high school dropout. We want to go out and make a success immediately, but great sobriety there around the learning first. I think it's important to mention you joined Arthur Andersen in 1985. You're then promoted to partner in 1997. So even that is quick by partnership standards. So that's 12 years. You obviously lead sales for various divisions, SAP resources, and ultimately ending up in the technology business as COO for the South Africa region. Just quickly before we get into the foray with what would be your first real entrepreneurial venture, certainly not discrediting all the work that you did as a consultant, but before you got into the venture capital space and something of your own there, were there specific milestones in this career? Were there things that might have happened over, I mean, again, we're skimming over 30 years, which feels like a gross injustice, but anything particular, as I say, milestone or highlight or maybe person along those 30 years that started to frame Clive and started to really give you this perspective of, man, this is why you need to be, because it's not, especially with such a long career, earning starts becoming taken care of, right? And then it becomes about the bigger things, the why am I doing this, the impact and those sorts of things. Anything instrumental maybe over those couple of years that you'd like to share with the audience?
Yeah, I think I go back to when I was that little kid and learning how to sell in a clothes shop, and I became the number one salesman every single Saturday morning, just from being shown by a mentor. And I think that again framed a lot of my thinking.
Sure.
And I really learned how to sell. I learned how to listen more than talk more. Learned to listen to what the problems were, what the customers were looking for, and I think that framed me. So being able to sell at a young age, and I go to Accenture now. So in the first year, 2, 3, 4 years, most people in the life of Accenture, they do coding. If they come from a computer science degree, they do coding. I coded for 3 months, and then I was already selling multi-million rand jobs. So here was this little kid of 22, and I was selling these multi-million rand jobs. And I must say, I had 3 mentors that actually, they saw something in me that I never saw in myself. And they came to me one day, and I remember all 3 of them came and said, Clive, I want to mentor you. One was a sales mentor, one was a leadership mentor, and one was an operational mentor. And these 3 guys mentored me. I climbed under the wing of great mentors, and they taught me so much about business. And one thing I learned from that was how important it is to actually be a talent magnet, to recognize great talent and work on that great talent, give that great talent, and turn that great talent into genius. Because they helped me do that. I was never the smartest guy in the room, ever. But one thing I learned from these mentors was always surround yourself with a better team than yourself. Now, you've heard that rhetoric a million times, but I actually practiced that.
Putting in practice is hard.
And I hired people, and a lot of people are just too insecure to do that. The A team will hire the B team. I was the A team, I hired the A plus team. And I'll tell you, so it was unbelievable. I recognized people that didn't necessarily have the intelligence and the track record yet, but I could recognize that ability and that skill. And I said, wow, these people are unbelievable. And I hired them, and I went and I either headhunted them or I found them within the organization, and I took them under my wing as a mentor, and I taught them. And I surrounded myself with some of the best talent you could possibly imagine. They were geniuses. I was not the genius.
Yes.
But I helped create their genius. I helped get them out of their genius zone. And I always call it, I always had a growth mentality, that more is more, and if you get a good person, you can turn them into a great person. I never had a fixed mindset that whatever they are, and that's the intelligence, they're never actually going to grow further than that. And me having this growth mindset helped them, and they all wanted to come work for me because they all realized what I was doing for them, that I was giving them this opportunity. I spent a lot of time with these people, and I mentored them, and I empowered them, but really, really empowered them.
And I think also to that point, that's some of the things that also frame one as a good investor. Right, it's more than the capital. It's this person who identifies these team flaws, the idea of empowering and building a great team around you, and all these other anecdotes that you would be able to share with investee companies who come into the portfolio. Very quickly, I want us to just two more quick anecdotes, maybe about your time. What was the most exciting project you worked on? If I say that to you, does something in particular come to mind, and you just go, man, this was it? That in that 30-year career, it might have been internal, it might have been for a customer that you worked on during the time.
No, I think no. I was young and I worked in Sandhill Road. I was in Silicon Valley helping build some startups. No question about that. It just brought up my entrepreneurial flair and my love for technology. I mean, technology at that stage was a completely different what you have today. You had an IBM mainframe 370, which was in a room 20 times, 30 times what the size of this was. That's actually what defined me, in all honesty, was that opportunity of working in Sandhill Road. And that's where I fell in love with venture. I fell in love with that, but Accenture, I kept staying there because I so loved what I was doing.
Yes,
I was so passionate about this consulting career and so passionate with the opportunities and the learning I was getting that even though I had an opportunity of working in Sandhill Road, and I could have probably left right there.
Yes.
I just felt the opportunity of staying with Accenture and building different parts of Accenture and building many, many businesses all around the globe. I worked in London, I worked in Silicon Valley, I worked in other parts of the world. So I just had so many opportunities. I headed up sales. I did sales training for many parts of the organization globally. I headed up the sales organization in Accenture before I became the COO. Had 50, 100 people, whatever it was, reporting into me. So all these things, I think, defined what I actually wanted to do.
Absolutely. And I think it's such privileged access to be in Silicon Valley in the late 80s, 90s, 2000s, as you're even experiencing .com booms and really the formative years of global venture capital, and then to be able to take those lessons and maybe bring them back to a continent like Africa, which we'll get into in a couple of seconds. Did you ever find, and this is one of the big questions I wanted to ask you, because I think back to what is now a very famous lecture that Steve Jobs gave to the MIT class in the early 90s, and when asked about consultants, how he gave quite a quick quip to say, well, he finds consultants neither here nor there because they'd obviously make recommendations and never really own the results. And did you find maybe that was one of the things that having such entrepreneurial flair in and of yourself, being great at sales, being able to build, did you find maybe that consulting wasn't enough at times and that you really wanted to get your kind of teeth into the meat of building something?
I think, pre-2000, we were a partnership of about, I think it was 11 of us as partners. I was the youngest partner in the firm, had about 500-600 people, I'm not sure exactly, but we were very entrepreneurial. We would make investments, we would grow businesses like entrepreneurs do. We didn't have 57 policies or 400 policies. Then we corporatized it and we became Accenture. And we corporatized and we ended up on the New York Stock Exchange. And from that moment, every little bit of entrepreneurship was sucked out of us. We became a corporate. And that was the day I started questioning, is this really what I want? Doesn't take away it was a great company, but it became a corporate. So everything we wanted to try and do, we had to ask permission 57 times. We had to go, and I must be honest with you, that's when my real passion, my love for what I was doing, I think it actually died out of me. Even though I still lasted a long time, I was so successful, earning a lot of money, and so I lasted. but it wasn't my love. It wasn't my passion anymore because I'm just not a corporate monster.
Sure.
And only 28 years later, I realized, let me go and do VC because that's what I want to do. I want to be flexible and nimble and agile and make my own decisions and just make decisions like entrepreneurs do. And that's exactly what I do now. Why I love venture capital so much now is because I am nimble. I am an entrepreneur.
Yep.
My startup is called Kalon. It's a startup. Yes, we raised $250 million and we want to raise another R1 billion, but I got myself into that startup. And more importantly, invested in 11. I've got a number of investments myself. I help so many people. I've probably built and helped over 100 companies already. And you learn different things from every single company. Everyone talks about the playbook. Yes, there's some things that might be in the playbook. But there's so many different things you have to learn about leadership, about entrepreneurship, about startups, about scale-ups, about, taking a business from $0 to $1 million, $1 million to $10 million, $10 million to $100 million. Fundamentally different skills and different requirements you need to actually do that.
It's almost like the adventure starts again.
Yep.
With each and every business.
Absolutely.
Which I think is very, very exciting. Thanks for listening. We're going to take a quick break. I'm Mathew Marsden, and this is the Startup Club podcast. Today's episode is brought to you by Guardrisk Launchpad, the disruptive insurtech initiative created by the country leader in cell captive insurance. Now, despite the rise of some incredible South African insurtechs in recent years, the industry still faces some of the highest barriers to entry of any vertical. To support innovators, Guardrisk, part of the Momentum Group, created Launchpad to partner with qualifying insurtech ventures and provide capital, acumen, distribution, and a suite of value-added support. To learn more, visit grlaunchpad.com. Before we get into this, just really the formative years of Kalon, which we'll get into in a second, and I can see you're raring to go on that because it's clearly what you're passionate about. Just talk to us. Were you married at this point? What was family life like as you're really pursuing this, what became a corporate career, many decades, loads of travel, hyper success in some respects? How did you find balance? And was that easy? Was it hard?
What's balance?
That's the question, right?
If I look back now at my career and I say, what do I regret? And I regret I didn't find the balance.
Sure.
And sometimes I said I do regret it, sometimes I say I don't regret it, because by learning, as I said, what I did at Accenture, 50 people joined with me. I was the only one that made partner. And I remember partner walking up to us and say, look around you, because only one of you are going to make it to partner. And I was the one. But what I actually did, I'll be honest with you, Mathew, I outworked everyone else. One thing I knew, had this abundant mentality and I was a multiplier. I always had this multiplier effect.
Sure.
So every time someone said, well, can someone help me with this and that and this? And I would put my hand up and say, I'll help you. I didn't have a clue what they were talking about. And the next day I said, can someone help me with this? And I would put my hand up and I would just quickly go and read it and learn it. And then I would help them and I'd do a good job. I worked my peers.
Yes.
I outworked them. I didn't out-brain them. I didn't out-intellect them. I outworked them.
Sure.
And that's actually what made me successful. But the other side of that came at a cost. I got married in 1990, 4 children. In 1990, I was really building my career. I was just, 7 years away from making partner, been in the company for 5-6 years. And I really did outwork everyone else, but I had to make those sacrifices. Sure. And do I regret it? I don't even know today, because I actually spoil my kids now because they've got everything.
Yep.
They've got absolutely everything. We've just got everything we could possibly want. Given them my one kid in education in a doctorate at Cambridge University. All of them have got unbelievable opportunities. They've all turned out into the most unbelievable children. Amazing. A lot of entrepreneurs amongst them. So no regrets, or maybe some regrets, but that would be one thing I'd say to everyone tells you that, you don't have to work hard. Sorry.
Yeah.
Maybe I'm old school.
I don't think that's the question.
It's you have to work hard.
And balance, and
you want to be an entrepreneur, you're going to work your butt off. There is no Saturday and Sunday. You're going to work your butt off.
Sure.
Go and ask anyone who's built a $100 million, $1 billion business. They've outworked, they've worked their butt off.
Yeah.
There's no easy days.
Yeah, it's funny. I often joke with folks when there's a public holiday like we had this week. It's an inconvenience. Because when you're building your business, it's just another day off. You can't get responses from vendors, from suppliers, from team. It's
and impact your revenue even worse.
Absolutely. So I think I get it. Let's finally talk about this move to starting the fund, right? And again, contextually, the venture capital in Africa is not a thing. Pan-African numbers, less than $40 million that same year. So it's what you're doing is pioneering on the continent, and you. I say retire in inverted commas in 2012. How old were you when you retired?
I was about 48.
Okay, which is also, again, unheard of these days, right? But in the position to do so, it's a privilege. And after a short stint, I think you were doing some venture entrepreneurial support, and maybe a bit of angel investing and mentoring. You initially joined GrowVest, which was a South African venture capital company incorporated under Section 12J. Again, that was a tax-deductible allowance, which was no longer around, unfortunately, but it allowed folks to get tax reprieve on investment into certain funds. And that was in 2014. But from that, you really spin out this disruptive technology venture capital fund, initially called Grow Tech, no longer a thing. It is Kalon, and Kalon is how we shall refer to it, of course. Just talk to our audience maybe about raising your first fund, because we've also got a large audience of LPs, of first-time funders, and most funders in this environment are actually first-time funders, right? We haven't even seen a 10-year cycle or 8-year cycle where funds can necessarily mature and spin out a second fund. So I read somewhere that Kalon closed close to 100 million rand in its first fund from over 300 retail shareholders and some institutional capital, the likes of Calio. I mean, how does that process even go? You know, what is the story that you spin to investors? Of course, it must be exciting. You can see the pioneer in you maybe waking up to this new opportunity. Just talk to us about just those first couple of months, maybe raising the fund and seeing how far this thing can go.
So I think, I was asked by Grovest just after I retired and to come into the board as a non-executive director. Okay. And I must say, I'm very appreciative of those guys because they taught me a lot about venture capital. I thought I knew everything, but I realized how little I did know. Sure. But what I didn't know is I went and read every single book you could possibly imagine. I go through 1 or 2 books a week. And you read and read and read and you learn and learn and learn, and then you practice it and you get actually real life experience. So that was a fantastic learning opportunity. But I knew that was just a means to an end. The end was I wanted to start my own fund. Sure. And I raised, as you said, 100 million rand. 40 million rand came from Calio Capital, being an asset management company. Second fund, we raised 150 million. So we raised a $250 million fund. Amazing. 600 investors, retail fund. But what I will tell any listeners, it is tough. It is really, really hard to be a first-time fund manager.
And I think if I hate to interrupt you there, but a lot of founders don't appreciate this. When you are starting a fund, you are a founder, essentially.
Absolutely.
You are having to go and raise capital from LPs, which in many respects could be harder than raising from a VC themselves who has a thesis and a mandate. And because it's so early, you're having to convince now 600 folks to part with their income that you're going to hopefully return a 10x multiple on, or whatever the number is, into a sector that really doesn't exist in Africa. So firstly, hats off to you. But secondly, I'd love you to explain maybe a little bit about how you went about that.
So I think just firstly, I mean, when I started in venture capital, it was a cottage industry in South Africa. I mean, we had, Hassa, the guy who sold his company for a couple of billion, he had
Mark Shuttleworth.
Mark Shuttleworth had a company in Cape Town that was then taken over by NAF. Yep. And, so it was really, there was a handful of venture capital companies. Sure. And so 12J was actually a big stimulant for the venture capital space. It was phenomenal because a lot of money was raised into 12J and not a lot of money for the tech ecosystem. So we raised $250 million. Maybe there was a couple of billion that was raised into the tech venture ecosystem. But for me, again, it was a means to an end. You know, for me, that $250 million was build a brand, get 11 companies doing well. We really are looking at exiting some of our companies now. But now we've got the track record. So now I think to go to your point about raising a next fund, I've had a lot of conversations now. It's still hard, and it's about kissing a lot of frogs. You got to kiss a lot of frogs because you're going to get a lot of no's. But as I said, sales is a rejection job. Sure. You got to accept that and got to get used to that. But we've already been offered a couple of $100 million for our next fund. Amazing. So it's just fun coming to us. We didn't even go out. They came to us and said, wow, they love what we're doing. They love the investments we've made.
Capital needs deploying, right? And
capital needs to be deployed.
Right
absolutely. And there's not a lot of people in this country, really, in the tech space, because the tech is taken off. Everyone wants to be part of tech. There are some unbelievable ideas, unbelievable entrepreneurs. I think where we lack in South Africa, I think we've got great people doing it, but we lack the execution capability. Sure. You know, if I look at some of my investing companies, where I'm investing in second or third time entrepreneurs, it's a different ballgame entirely to invest in a first time entrepreneur. Yep. And first time entrepreneurs don't know what they don't know. And they don't know that someone's reached a ceiling quite quickly. And then you need to actually bring in a professional CEO that you can't actually keep on backing them because they've never been a CEO before. Now, some of them are unbelievable. They learn it as they go and they're phenomenal, but some don't. And they actually reach a ceiling. But it is tough to raise capital.
Tell me very quickly, what was the first deal you ever did?
The first deal we did was a company called Snap and Save. It was a loyalty program, an entrepreneur in Cape Town. We did it with a Smollen group who's very much into this type of thing. Yep. And it was like a nerve-wracking time. You know, at the time I thought, are you betting? How much money are you betting? What if you lose this money? Now I take a totally different mindset. You know, now my mindset is you'll lose your money. Just accept you'll lose your money. And we go in there with a 10, 100x expectation, making a minimum 10x and getting hopefully 100x, because you get 100x, that pays for your whole fund and pays for the returns that you've promised your investors. That's all you need. It's called the power law. So if you're investing in 10, 11 companies, get 100x, and you actually have done extremely well. But we don't go out there to get 10x or 100x. We go out there to get, if we make 10 investments, to get 10. But at the same time, I'm not naive. I also recognize that we are going to make some mistakes. We're doing well at the moment, and touch wood that this will continue.
Do you have a particular investment that excites you in the portfolio? I mean,
I've got many.
There are loads, of course. There are Ozow, Sendmarc, wonderful companies that have raised millions of dollars, right? Mobiz, I'm not going to name all of them, Talk360. But any of them that particularly you saw this deal, you got in at maybe just the right time, everything made sense valuation-wise. Was there one that you were like, man, we got in?
You know, I must admit, it's like I've got like 11 additional children, and I can't like one child more than another child. So I'm not going to answer that question, but I love them all. Yeah. And I'm very much a hands-on venture capitalist. Now, there's two types of venture capitalists. The ones that make the investment, and I'll see you in 3 months' time at the board meeting. They have to check their Rolodex to see what your name is. They'll never get involved. Or someone like Kalon or like ourselves, who on the phone literally every day, if not every week, it's every day, to our entrepreneurs, helping them. How do I build? How do I run sales training? I help them set up sales organizations. I help them open my network. So we're very, very, very involved. I'm extremely involved in all these companies. So we are very high-touch capital. We are not a low-touch capital. Sure. Everyone talks high-touch, but there's not a lot of high touch because I'm actually, if you look at me, I'm actually not an investor first and then an operator. I'm an operator first and then an investor. I've been there. Yeah. I've seen, I think like you were saying earlier, I've been there and I've seen how hard it is. So I know what it takes to go from 0 to 1, 1 to 10, 10 to 100. I've been there. I've built those $100 million businesses. So, and that's what the entrepreneurs really appreciate. Most of them, some of them feel they have to now have all the answers, but that's very much a fixed mindset when you're not open to coaching. And one of the key criteria I look at a lot of criteria, the team, but are they coachable? Because if you're not coachable, it means you've arrived. And I've not arrived.
How do you measure that? Is that just a question, or is there a sense that you get about
it's experience. It's about being able to pick winners. And, when you know what you're looking for, you court for quite a long time. Yes, you might give the term sheet, but then you're speaking, and then sometimes you come across, I've walked away from a few deals that now I've gone bankrupt because I think the reason is that entrepreneur skills, when you build a company, often the founder's strengths become the company's weaknesses. Sure. Because the founder, let's just say they're marketing experts. They won't hire marketing. They'll hire very junior people for marketing. Yep. So initially, with your first 1 to 10 people, you won't hire anyone because you're a marketing person. But when you've got 100 people, the marketing becomes your biggest problem. So, and this is a coachability issue. I speak to them a lot. I spend a lot of time while we're doing the DD. And if I see that, hold on a second. This person doesn't want to listen. And I'm never here to tell an operator what to do. I'm here just to share my experience. So maybe look at these ideas, maybe think about them. But if they don't even give you the time to share your ideas, I'm saying, they're going to be as good as they know, and they're never going to get further. And I walk.
That's a very obvious challenge, I think, for a venture capitalist trying to add value, and also where you can maybe see the blind spots of the founder, but they're not necessarily open to hearing that. I mean, I can't even necessarily relate, but incredibly frustrating, I'm sure. Maybe quickly talk through, you've obviously got exciting prospects at the moment. We'll get into those in a few seconds. Having now done this for probably the better part of 8 years, almost a decade, what are some of the biggest challenges to running a venture capital fund in Africa for you?
Look, I think, it's getting South Africa, I always say, build your business where you plant it. Sure. So build your business where you birth it. If you birth it in South Africa, build it in South Africa. Because South Africa's it's not a big market, but it's an okay market. You can get to 100 million, maybe 200 million in South Africa. But I think the biggest challenges are getting your intellectual property out of South Africa. So, because ultimately we want to exit these companies. We don't want to exit a South African company because you'll get an exit in rands. We want to get an exit in dollars, euros, pounds. So probably 5 out or 6 out of 11 businesses now are re-domiciled in Delaware, Luxembourg, UK, Amsterdam. And we know if we get an exit now, we'll sell it in those currencies. So I think the biggest challenge with our intellectual property laws is actually because you're creating jobs. So what we do here is all the operators are in South Africa, but the IP sits overseas. So we can get an overseas exit. Plus we can raise the next round of capital. Sure. We don't have the money to put a $5 million round into the next raise, or 10 million or 20. Like Ozow raised $48 million. We could not put $48 million into that. We don't have that sort of capital. Sure. So they fortunately were able to get an investment from Tencent, from China, and then a VC based out of New York put another $20 million in. We didn't have that. So that's probably the biggest challenge, is getting these businesses overseas that you can raise that next round of capital and really take it from a startup to a scale-up.
How early would you recommend to a founder to look at doing that, especially if they're sitting on maybe some hardcore IP, R&D, tech, something that they want to get out of the country? Do they wait until Series A to worry about doing that? Because that's often the rhetoric. Business is so successful, we'll have the cash flow, we can justify it. Or do you recommend incorporating offshore from as early as possible?
Well, I think one thing, first and foremost, for the business we invest in, there's no cash flow. Yeah. These guys are...
Yes, of course.
In the old days, it's, cash, it's growth at all costs, and it's not about capital efficient growth, it's growth at all costs. We've now moved to capital efficient growth. We've now moved to get to cash flow break even, and quite a few of our companies have achieved cash flow break even, which is not a word I could even mention when I started. It's unheard of.
In the venture capital
but the
space,
world's
right?
changed.
Yeah.
The world has changed. If you can be capital efficient and get to cash flow break even and fund your growth out of cash flow, opposed to funding your growth out of new capital. Yep. I've said to every business that we have, assume your last round was your last round. There is no further capital. So we've got to get a cash flow break even. And it's a hard mindset. You've got to get rid of people. You've got to restructure your organization. You've got to see if everyone's adding value in the company. Whereas before it was just hiring ahead of the curve. Now it says, whoa, we hire beyond the curve, not ahead of the curve. Sure. We don't have that capital. Sure. This was 2001. It was just so frothy. Everyone was raising money at ridiculous valuations.
Well, even a few years ago in Africa, right? So
in Africa as well.
You could really just raise capital to fund growth at all costs. Whereas
everyone was doing that. Now it's a different ballgame.
About the market, sure.
So to go to Africa, I must be honest here. So I think the last year was about $6 billion worth of capital went into African startups. Yep. There's some great startups. There really are. I think what they need is surround themselves with the right types of people. Because I don't think it's all about the team. And if you've got a great team and you've got great passion, you're going to hire the best team, because that's how the talent, you have to become a talent magnet. Sure. And it's not about, when I invest in companies, I look for, firstly, the hacker. So that best engineer that you can possibly find. Then the hustler, the Clive type of person. Yep. They can go and commercially oriented, they can sell. And then the hipster that's really good at UI and really good at design. So if they've got those three types of people, I often find just engineers. I won't invest in just engineers. No disrespect, but engineers like building things. They want to build and build. I say, have you gone live? No. We still got to build this feature and this feature.
Stop also different building. Building a business, right? Yeah, building product.
It's too expensive. Just get the MVP out there, get it out there, get it in the hands of customers, and then you'll build more and more and more and more and more. So I like having the commercial guy, having the technology guy, and having the UI guy. And if we've got that sort of combination, that's a winning combination. And preferably someone's been there before and built a company before, that the chance of us being successful go up tenfold. Absolutely. In all honesty. Absolutely. So we've got a playbook for what I know what I'm looking for in, and I think 8-9 years ago, I don't think it was as refined as it is now. Now I can meet honestly, and I don't mean to be disrespectful, I can meet an entrepreneur in 5 minutes, and I know it's a maybe it's not a yes, but I'd like to hear more, or it's a no. Sure.
Which is just conditioned.
That's experience,
right? It's experience.
That's exactly.
2 quick things in the limited time we have left today. You've mentioned Kalon has got some very exciting prospects, and I do just want to give you the forum to be able to talk to those. You specifically on raising a Pan-African, close to $50 million fund. Maybe just talk to the audience about current plans and where you see that going.
Yeah, so I think as I said, I think Kalon was a means to an end. We've built a great brand. We've got some great companies. But in all honesty, if we want to go into Africa and become a major player, not just a Series A or pre-Series A or even seed investor, we want to invest in A and maybe even in, participate in B, we need to have a bigger fund. So my big, hairy, audacious goal right now, the firm's big, hairy, audacious goal, is a minimum $50 million, which is $1 billion rand raise, which is what we want to do. Now, is it going to be easy? No. I don't think it'll be easy at all. But I'll tell you something, I love challenges. Absolutely. Give me a challenge and you give me a brick wall, I'll fly over it, I'll dig underneath it, I'll find a way around that thing. And that's what we have to do, because I know there is money going into Africa. I just want to be in the queue of getting it. So I've had quite a few conversations. In fact, this afternoon I've got 2 more with potential investors, and there's a lot of interest about coming into Africa. Amazing. America, it's the VC, there's so much dry powder, which is so much capital in the VC ecosystem. But no one's investing right now. Well, not no one. They're investing into AI. 80% of all capital is going into the world VCs, going into artificial intelligence. But into other verticals, there's hardly any capital going into it. So that creates opportunities for us in South Africa and in Africa. So our big area of Dash God is definitely a $50 million fund. And I think we're ready. We're ready to...
And that'll be Pan-African...
Definitely Pan-African, with the same intent of getting the IP offshore and then ultimately raising funding from global global investors, let me rather say, or global exits.
Yeah. Listen, the Africa opportunity is obvious, I think, right? To find these arbitrage investments in emerging markets, especially when you're so crowded in a place like Silicon Valley, makes so much sense. So, and I think if anything to take away from our short time together here, you're probably the right guy to go and get that capital to raise a fund. So we'll certainly be
from
watching.
your mouth into someone's ear.
Exactly, right. So we'll certainly be watching and hoping for a promising press release soon. Clive, the final question I have for you, and it's one that we ask all of our guests, and if you can just indulge me for a couple of minutes longer, is, you've had this blossoming career. You probably could have called it a day and just gone off to a holiday resort, in your early 50s post Accenture. You've then pioneered something fresh, and you can see that you're as energized and as passionate as ever. What does success look like for Clive the day that he finally decides to sit on the stoop and go, okay, let me reflect on all of this? What does success look like? Is it this is obviously a pretty obvious answer, but is it financial? Is it balance? Is it with the relationships around you? What does success actually look like for Clive Butkow?
I think I'm in a very lucky position. Everything I do today is because I want to do it, not because I have to do it. So I achieve financial independence, which is unbelievable. You achieve financial independence at my age, and it past 30 years of your life. You do what you want to do. Do I want to sit on the stoop or play bridge? Or my dad was a South African bridge champion. Do I want to play bridge? No, not yet. Maybe in 10 or 15 years' time. What I want to be looked at is how many lives I changed. Because I change every day, and I help. There's a few organizations where I sit with entrepreneurs and I give them guidance and advice, and we just see ourselves, myself and a group of other people, changing their lives. So I want to see that Clive changed thousands and thousands of lives. One through venture capital, but other just through my own passion. I want to help people. I'm just so blessed with the skills and the experience I've got in entrepreneurship. On tech entrepreneurship is exploding, absolutely exploding. The knowledge is not exploding.
Yep.
They need to surround themselves with great advisors, great people that can actually just see the road ahead. Maybe that road, don't take the left, just go a little bit right. And they might say, why? I said, because I've seen that road before. Stand on the shoulders of giants. And so that's what I want to keep on doing. I'm doing it all the time. It's not just in my venture companies. I want to keep on investing, but I want to keep on changing people's lives. Because I just had a phone call from a guy in Cape, and he said, Clive, you don't know me. Can I ask your advice? I said, with the greatest of pleasure. So many people reach out to me on LinkedIn and said, can I just have your 15 minutes? I said, I'll give you time. Just phone me. I'll give you time with pleasure. If I'm busy, I'll phone you back. And I can hear it, the appreciation for one. And it makes me really sleep well at night when I change people's lives like that. And I'm so privileged to have had the background that I've had and achieve financial independence that I can actually change people's lives. But that's what I want. When I go to bed at night and I think, whose life I've changed, I sleep like a baby.
Sure.
That is what I want when someone does my eulogy one day, is how many people's lives I've changed. And I love it. And it's my passion.
Amazing, Clive. And long may it continue. I think there'll be some listeners who probably reach out to you on LinkedIn post
with pleasure
this interview. So please expect that. But an absolute pleasure to have you on the show today. We wish you all the best with this next fund. We're excited to see the prospects and where this goes to from here. Ladies and gentlemen, Mr. Clive Butkow.
Thank you very much. Real privilege.
Clive. Cheers.
Cheers.
Thanks for listening to today's episode. That was Clive Butkow, founder and CEO of Kalon Venture Partners. I'm Mathew Marsden, and if you enjoyed today's episode, please be sure to subscribe to our channel, follow us on our socials, and be sure to share with your network. See you next time.